Rick, are you able to see the chat?
I am. I just need to move it
Okay,
to another
perfect.
screen here. One moment. I'll move it over here. There we go. Okay, excellent. Let's see what we're also going to do. We're going to pause. Oh, all right. And Courtney, if we want to pause recording until we get to start, I don't know if you can do that or not. One, two, three, four, five. All right, guys. Good afternoon. We're going to get started here just a few minutes here with understanding the Corporate Transparency Act. So give folks a chance to join us. We're expecting a few folks on this call today. So give everyone a chance to jump in here and get ready for this conversation.
Perfect.
All right, for those of you just joining me, welcome to today's Strategize Me session of Understanding the Corporate Transparency Act. We'll be getting started momentarily. So you have time to do a quick one function break, and we'll get started here as soon as a few other folks join. All right, we'll give everyone just a couple extra minutes here and they'll be ready to roll. If for any reason during today's session, if my microphone goes out or all of a sudden it sounds all garbled or something crazy like that, feel free to drop that message there in chat so I can see it and I can adjust accordingly. Those things do happen here on these live webinars. So please let me know. I would rather know sooner and change a microphone or something rather than just continue blabbering on for 20 minutes and have no clue. So thank you for that in advance. All right, guys, we'll go ahead and get started here today. So my name's Rick, and it's a pleasure for me to produce today's session of Strategize Me, presented by the CMURC. I'm a proud CMURC member here in Midland. So if you're ever by the Midland location, stop by, say hello. Would love to see you. For those of you joining from Middle Tennessee today, welcome. We're glad that you're here as well. And again, I was just there last week, and so had a chance to spend some time with the folks down there at SBA and SCORE Nashville. So always good to see you all as well. And I know this session is being recorded. So for those that I'm reaching out to today on recording, again, we're glad that you could join us here today. So with that, you should all be able to see my screen here. So we'll go ahead and get moving forward. Today's workshop, guys, I am a licensed CPA, but please keep in mind that today's content is being provided for educational purposes only, and you should seek the advice of a licensed professional who's familiar with your case before you act on any aspect of today's information. Now, today's information, I'll just kind of be direct with you, is pretty cut and dry. But if you feel like you need any additional information from a professional, please make sure that they are in fact up to speed on your situation before encouraging you to make an election. And additionally, because I am a CPA required to go over Circular 230, that the information contained in today's workshop, guys, is not designed to avoid or it's not any kind of strategy against avoiding U.S. tax-related penalties. Believe it or not, that used to be a big thing where CPAs would have workshops just to do certain things and then avoid using the law to avoid penalties. And of course, that's not at all what today's workshop's about. So, but we're glad that you're here and along for this ride here on the Corporate Transparency Act. Now, the Corporate Transparency Act is a law that was passed during the Trump administration that requires businesses to report, I hate to read off slides, but unfortunately, some of this stuff is just so direct. But what it does is it's required to report your beneficial ownership information to the government. Well, what does that mean? What that basically means is that if your business has 25 or fewer owners or members or shareholders, that you're probably required to file something with the federal government, something that is new. And you're like, Rick, but 2019, that was 5 years ago. How can this be new? Well, this is one of those situations where we had a law that was passed in 2019, but it's in fact becoming enacted, and a lot of its provisions are becoming enacted starting, actually the last 5 years. But the items we're going to discuss today are in fact becoming the law of the land today. So the Corporate Transparency Act passed in 19, but a lot of the provisions are coming online now. So why was this created? What's the purpose of this? Well, the Corporate Transparency Act is all about one thing: preventing money laundering. That is the biggest deal here with the Corporate Transparency Act. And in a lot of states, I don't know if you guys realize this or not, but for those of you that are in Michigan or Tennessee, you actually have to provide some personal information when you create your entity, whether it's, generally speaking, it's the organizer or incorporator's name and their contact information. It's a lot of times if you file your annual report, it's going to be names of directors of the business. And because of that, because all of this is done under state law when we create the entity, a lot of times the federal government does not have complete transparency into who's behind these entities. Now, the situation becomes even murkier in other states such as Delaware, Wyoming, Nevada, where in those states you can create an entity and there does not have to be any public disclosure of your individual identity at all. So that what the Corporate Transparency Act did was it requires even owners of those entities to say, okay. Under state law, you're not required to be a public person. You're not required to publicly disclose. But as the federal government, we want to know. So that's the reason why, because ultimately, if people can just create these shadow businesses with unknown activity going behind them, and then you have these issues of money laundering, terrorist financing, things of that sort, it gives the federal government to know who to investigate when there's suspicion of illegal activity. So that's why it was created. Now, who needs to follow the Corporate Transparency Act? Most small businesses, 25 owners and less, need to register for the Corporate Transparency Act. Corporations, LLCs, pretty much any entity that's created by the Secretary of State of your state is generally required that needs to comply with the Corporate Transparency Act. Now, exceptions include large corporations, large being defined in this case as a corporation or an LLC with more than 25 individual owners or control persons, publicly traded companies, or other regulated entities. And we'll get to that in a moment on exactly who does not need to register for the Corporate Transparency Act compliance. So when we talk about CTA, there's a couple important terms to know here. The first is a beneficial owner. A beneficial owner is somebody who owns or controls at least 25% of the business, or big capital or here, exercises substantial control over that entity. So even though a person may own 0% of it, if they exercise substantial control, then they must also be listed as a beneficial owner. I have a client like this, as a matter of fact, right now, where on paper, only one individual is 100% owner. But it is very clear as an accountant and as the person who works with these individuals that somebody else, another party, is certainly involved or certainly pulling the strings, as it were. That would be an example of a control person, and they would also have to be registered. Hey, Courtney, I see you raised your hand there. Is there a question I can answer for you?
Yeah, we can't see the PowerPoint.
Oh, I
If you have a
can't.
PowerPoint, it's a black screen.
Oh, no. Let's
Yeah,
see
I'm
what we can
trying to
do about that.
troubleshoot on my side, but I'm not seeing. Okay.
How about
Yeah,
now?
we could see it now. Yes.
All right, great. Thank you for that, Courtney. I appreciate the heads up there.
You're welcome.
Okay. So just real quickly here, guys, we can just go back through here real quick. We had some slides here on what the corporate transparency was. It was a law passed in 2019 that required businesses to report beneficial ownership information to the federal government. Again, seeks to combat illegal activities like money laundering, terrorist financing, and other financial crimes. And most businesses need to comply, especially the keyword being those owners that have at least 25% or more ownership of an entity, or that exercises substantial control over the entity. And the other question is, well, what is a reporting company? So if we have beneficial owners, we've defined beneficial owners, then we're also going to define reporting company. And this is the business entity that needs to report the ownership information on its behalf. Now, many of you might be thinking right now, you know what, Rick, we opened a new bank account a couple of years ago. And while we opened our bank account, we had to supply a lot of information to the bank, and they said it was for beneficial ownership information purposes. So because I did that when I opened my bank account, I'm good in this, right? The answer is no, absolutely not. These are this it's the same law, but it's two very, very different provisions of the law that's being enforced here. So yes, many banks over the past 5 years have rolled out various procedures to report beneficial ownership information. But what we're speaking about today is specifically your responsibility as a business owner as it relates to what you have to do and do you need to report. That's what we're covering here today. So a lot of people are really hesitant about this because I'm giving information to the federal government here. I feel like I already give a lot of information to the federal government, especially as it relates to think about the Internal Revenue Service. They generally know a lot of information on you. And I'm also, guys, in today's workshop, I'm not going to discuss the I am going to discuss the legality of this law. I'm not going to discuss the provisions of the various lawsuits that are attacking this law. We'll cover that more at the end in terms of what's happening. But as far as the merits of those cases, we won't have time to discuss those today. What we are talking about, though, is specifically how is the law required to be dealt with and managed today based on the views from the Department of Justice and the guidance they put out for us to follow. So, what information must be reported when you submit this information to the Financial Enforcement Network area of the Department of Treasury? Well, the full name of the beneficial owner, first and foremost. And who is the beneficial owner? Go back to the previous slide. A person who owns or controls at least 25% of the business or exercises substantial control over it. Have you ever heard of the idea of silent partner or a silent investor? You might have somebody who might own 80% of the business, but if the 20% owner is the one who's pulling all the strings and doing all the work, and the other 80% owner is simply a passive investor, well, then in that case, then both owners would need to report. One, because they own 25% of it, and the other because they exercise substantial control over it. All right, so the full legal name of the beneficial owner, their date of birth, their residential or business address, and a copy of their identification and identifying information. Now, generally speaking, this is going to be your driver's license, but it can pretty much be most of the documents that you're used to supplying when you open a bank account. Primarily and ideally, it would be your driver's license or passport information. That is, state issued ID, absolutely fine, certainly. Military ID, I don't remember that one being on the list, but the ones I remember specifically being on the list, driver's license, state issued IDs, passports, and whether American or a foreign passport, either one will work. How do you submit this information? Well, this information must be filed on the Financial Crimes Enforcement Network's website through either an online form or there is actually an Adobe PDF form that you can download and basically upload your information to that PDF form and then submit it as a standalone form. So you can choose to do it online or you can choose to do it as a standalone PDF document. Here's the key thing I want you guys to be aware of is the reporting deadlines for this rule, because these are the things that are kind of surprising people now that we're in August of 2024. And it's like, wow, we've only got a few months here left to comply with this law. And the way it's going to work is this is what it breaks down to, guys. If your business was formed during this calendar year of 2024, you have 90 days from the date of your formation to register with FinCEN. Okay, 90 days. Starting next year, if you create a new business or a new entity, you have to file within 30 days of formation. So 90 days this year, 30 days starting next year, and going forward unless the law changes. Now, what if you're a business that existed before 2024? Well, if you are a required entity that has to file and you're you were formed before this year, you have to file just sometime this year before January 1st, 2025. Okay, so anytime this year, you're good. You just need to go ahead and get that filing in. And if there's ever any changes of your information, you must report that to FinCEN within 30 days of any change. What's an example of a change? Well, if there's a change in the beneficial owner of an entity. Okay, so if all of a sudden, if I sold my business, then that would have to be reported, generally speaking, by the person who acquires the business. Could it be the seller too? It could be, sure. But when that information changes, it is required to be filed within 30 days of that beneficial ownership change. All right. So again, just in review, guys, if you create your business during this year, you've got a 90-day window to comply. If you create it next year or after that, you got 30 days to comply from the date of formation. And if you were created before 2024, you have to file just sometime before the end of the year. That's it. Very simple on this, y'all. Yes, Courtney.
Looks like we have some questions in the Q&A. I'm not sure if you're able to see the Q&A piece, not the chat, but the question and answer box.
I can, let's see your Q&As. I do see them here. Let's see here. Does the law provide insight on how the ID info will be submitted, will be protected? In terms of how the entire information, the entire website is all administered by the Department of Treasury. So when you think about the Department of Treasury, there are multiple agencies inside Department of Treasury. IRS is probably the most known one. So when you think about supplying personal information, we all generally trust the IRS to keep our information confidential. It's exactly the same with FinCEN. The difference is IRS is the agency that's charged with executing our tax laws and all the policies that go with that, whereas FinCEN is specifically an investigative body that seeks to find money launderers and things of that nature. So the information is completely embedded in their website, and they do guarantee privacy when it comes to that information, in the same way that if you were to e-file a tax return with your social security number and all that pertinent information on there, that it would be secure. Now, that being said, your social security number is generally not part of this submission. The only thing that they ask for is your name, your address, and for you to upload your identifying information off of your state ID or your passport. So they're not even asking for your social. It's so from a standpoint of secure and privileged information, certainly your ID is privileged information, but it's you know, it's a little more, how to describe it, it's not probably as secure as it would be if you're transmitting your social security number. And a lot of people, I hear this too, well, my EIN number, isn't that secure? That's like my social, right? As a CPA to that, I say no. Your EIN number is, you know, a lot of people are going to request it, especially on Form W-9. So because it should be readily available to those who request it, no, I don't pay much attention to, I've got to keep my EIN number under lock and key. It's really very difficult to do much with it that's really going to benefit somebody else. Now, somebody can cause some damage with that information, but as far as enriching themselves off that, that's not really a thing. All right, great question there. Thank you. Let's go ahead here. Yes, Courtney.
Sorry, I'm running two computers over here and trying to.
Oh, you're
together.
Good. You're fine.
Okay, so we do have another question.
Okay.
Alicia's gonna ask that question. She's here with me.
Go ahead, Alicia.
How are you?
I'm good. How are you?
I'm fantastic. So my name is Alicia. I'm with Cakes the Great Popcorn Company. Courtney has allowed me to sit in with her, and I had a question. Maybe you're getting to it in another slide, but I noticed when you said changes in information has to be done within 30 days. Does that include a dissolution of the LLC?
Great question. So right now, as far as the changes that are in there, and we're basically talking right there is when an active entity becomes inactive. So right now there is not there's not a reporting requirement when a active entity turns into an inactive entity. Okay. So when we get to that slide, we'll see that inactive entities actually do not have a filing requirement. But you do bring up an interesting point, though, that kind of got me thinking on something else, though. We talk about changes of information. I mentioned the idea that, hey, if our business ownership changes, then that would be an example of a change in information. But what's a more basic change of information that may need to be reported? Change of address. If your address changes, you move, whether you move business locations or you move residences, you would want to report that to FinCEN within 30 days. All right. Let's go ahead here and continue.
Thank you.
The next question here, is your information safe? Same question we had off the chat there. And absolutely, it's only this information is to be limited to administration by FinCEN. And again, I keep on saying FinCEN, and you're like, Rick, you're saying that this is the financial crimes enforcement network is what this is. And generally what these guys do, have you ever heard, for example, that if you make a large cash deposit at a bank, that information is reported to the federal government? Well, it is. And when you do that, the information goes to FinCEN. They're the ones who administer that on behalf of the banking industry, that if large amounts of cash are being transferred between entities, FinCEN is the exact same group who receives that information as well. Now they're receiving information based on simply who owns these companies and who's running these companies. That's the whole intent and purpose. But yes, the information is absolutely deemed to be safe to, underneath the Department of Treasury. Now, the next question is, and this is from a standpoint of just enforcement and compliance and that sort of thing. Well, Rick, does that mean my information is also open to, say, like the FBI and other federal agencies or law enforcement agencies? The answer would be yes, it could be. If you are being investigated for a financial crime, then those financial crimes are investigated generally by the FBI. And they're the ones who, they're the federal police force, if you will, along with the IRS, who would be, the one sourcing that. So far, the FBI has only had information from the IRS to work with. Now, yes, they are going to have your information, but it's one of those things. If you're not doing anything illegal, then there's nothing to be concerned about. If you are doing illegal things, then I think perhaps being compliant with the BOI might be the least of your concern. Now, what happens if we don't comply with the BOI requirements here? What is the worst that can happen, Rick? I mean, after all, it's a new law. There can't be much that can happen that's bad with this, right? Well, unfortunately wrong. When Congress passed this, again, this was passed by, it was passed in 19. So during that year, we had a Republican House, Republican Senate, Republican presidency that passed this, and they put some teeth in this for enforcement, which basically says that this law can result in fines up to $500 per day with a $10,000 cap, plus criminal penalties, including up to 2 years of imprisonment for failure to comply. Now, that is the letter of the law, okay? And I'm reporting it exactly as it is conveyed in the law. Now, in reality, what if we go back here to one of these other slides, and you're like, Rick, I started my entity back in February, but I did not file in 90 days. What should I do? I would encourage you, now that you are aware of what the law is, to go ahead and comply with the law, okay? To go ahead and get that in and be compliant as soon as possible, because now you are aware of the law and you are making your best efforts to comply. Okay, so again, that's my recommendation, but you may choose to seek your own legal counsel in that. But generally speaking, when these types of laws are generally out there, and I'm going to reference this to the Secure Act, for example, we've seen a couple rulings in the Secure Act, and the penalties for noncompliance of Secure Act are also very, very large. The issue is they generally assess penalties when there's willful negligence of the law. Now that's not written into the law, but as they say, that was the intent. They want to make sure their plan is to give taxpayers time to learn about the law and be compliant with the law before they start to enforce the law. So if you're in a situation where perhaps you did not file when you should have because you created an entity sometime in 2024, I would encourage you to go ahead and do that as soon as possible. Okay? Whether you do it, whether your legal or tax professional does it for you, as a CPA, The American Institute of CPAs has come out overwhelmingly and said, CPAs, you should be out there with your clients talking about this. This law has teeth in it. And as CPAs, most of us have the information to do this for our clients. And as a leader of compliance that CPAs are, this is a reason why we're out in front here having conversations like this with the public to say, hey, listen, this is absolutely required. This is the law of the land. And unless a court comes in and gives a blanket ruling that has nationwide impact, we have to follow the law as it's written today. All right, let's keep going here. So again, here's the penalties, guys. Here's the, here's the stick if we don't act accordingly. Why comply with the law? Well, we just discussed the financial reason on why a moment ago when we looked at the fines and penalties for not complying, but it helps maintain the integrity of the financial system, reduces fraud, and protects your business reputation. Now you might say, Rick, why does my business reputation have anything to do with my compliance with the CTA? Well, ultimately, when there are people that are willfully negligent of following the law, generally speaking, we have a habit in this country of making an example of those people. And obviously their companies are not made to look really great when the business owner is taken away in handcuffs because they didn't comply with the compliance law. So that's what we're talking about, protecting your business reputation. Is you don't want your name in the press or publicized as somebody who willfully neglected to follow the law. That's exactly what this deals with. All right, let's keep going here if there's no other questions. So what do you need to do to prepare for compliance with the Corporate Transparency Act? The first thing you do in your business is identify your beneficial owners, okay? Who are the individuals who own 25% or more of the business and or have substantial responsibility, substantial control over this business? Gather the required information. What information? Their name, their address, and their driver's license or passport information, and an image of that driver's license or passport. We encourage all owners to stay informed about reporting deadlines. Now, in a moment here, we'll discuss what's happening in the 11th Circuit on this law and the implications it has on the rest of the country. But for right now, we're all required to file as the law is written at this time, which is the deadlines we discussed before. Okay, so again, if you had an entity before 2024, you have until the end of this year to report to FinCEN. Okay, and then set up a system to track changes in the event that there's a change in ownership. Now, all of you, as part of excellent corporate compliance, has some kind of roster of members or shareholders in your corporate records. And you might say, Rick, I created my LLC back years ago, and that document hasn't been changed since. Well, as long as there's been no change of ownership, that's fine. It didn't have to change. But if you had a situation where ownership has changed, that should be documented over time in the corporate ledgers. If you don't have that system in place, I would encourage you to work with your accountants or with your attorney. This is more of a legal thing, so more your business law professional, to make sure that your corporate documents have all the required elements. It's not just, if you're an LLC, it's not just your operating agreement. It's also a roster to track changes of ownership of your business. All right. No questions there. So let's go ahead and cover some FAQs on this. Do I need to report if I'm the only owner? Great question. The answer is yes, you do, but only if your entity was created through the Secretary of State and you are not an exempt company. So what's an example of this? Well, believe it or not, even though I'm a CPA, I am required in my business to comply with the Corporate Transparency Act. Now, if you're already aware of this, you may say, but Rick, I didn't think CPAs were required to report. I thought you were an exempt company. I would be an exempt company if, as part of my practice, I performed assurance services, not insurance services, assurance services. And those of you that are on the meeting that know about accounting, you know what we're talking about. We're talking about, preparing financial audits, reviews, compilations, attestation services. Well, that's not what I do. No, I work specifically in tax law and tax compliance, and I do a lot of advisory services. So because I'm not independent, I don't do those things. So I don't meet the definition of Sarbanes-Oxley as it relates to a regulated accounting firm. That's not what I am. So there's a complicated case there where even though I'm the owner of my firm, I do have to comply with the Corporate Transparency Act and disclose. All right. What happens if you have multiple owners? Well, we discussed that too. Reporting of all owners with significant control or ownership. Control or ownership. Now, one of the things that I think here is difficult is, well, how do you define significant control? That term does not have a specific definition. A lot of people might say, well, I'll know it if I see it. And I think that that's pretty much the ruling until we see some enforcement on this. That's pretty going to be how that's going to be perceived. If there is somebody, for example, like the illustration I showed before, where there's a majority owner, but a minority owner is the one who runs the ship and may have the title of president, but they're a minority owner, then clearly in that case, that president would have significant control over the corporation. Because just because you're the president of a corporation does not mean you're the owner, nor does it mean that you're the majority owner. Those things are not necessarily true. It all depends on that business and its bylaws and its rules of operation. So where can we go to get actual assistance here as it relates to this law? Well, certainly, and you'll notice here I put some notations here, of course, legal advisors and attorneys. The great thing about those folks is they are independent. They don't work for the government. They don't have, they don't have a, they don't have any skin in your game, if you will. They have their own thing going on, but not in yours. So there's an independent place where you can seek advice and information regarding the Corporate Transparency Act. Certainly your CPA is also a great place to get information about the Corporate Transparency Act. You can also reach out directly. The U.S. Department of Treasury FinCEN division does have a Q&A division to seek to help educate the public and let them know what their requirements are. But look at that, I mark as not independent. One thing I do in my firm, for example, is I represent clients before the IRS who are having tax issues. Well, in that case, guess what? I don't run to the IRS and ask them for information with how does my taxpayer need to comply with their laws? Because they're not independent. They represent the other side of that question. So if you're looking for independent advice, seek out your legal advisor, attorney, or CPA. But certainly the U.S. Department of Treasury FinCEN group is certainly trying to get out in front of this and let the public know what their requirements are under the law. All right, we discussed the various entities. If you remember, who are the entities that are required to file under the Corporate Transparency Act? Well, generally speaking, it is any entity that's created by the Secretary of State of your state, or a state for that matter, and that has either 25% or more ownership or has significant authority over that business. Well, here is a list of entities that are exempt from this. Now, I'm going to caution you. I'm going to read these off and we're going to go over them. But if you think one of these applies to you, don't just look at my slide and say, Rick, I'm a financial market utility, whatever that is. Don't say because I'm a financial market utility, immediately I am exempt. There is a Q&A under each one of these things that if you can mark affirmative and all the questions, then you are definitively these things. But this would be a good guide for us to go on. So the first one is securities reporting issuer. Probably nobody on this call, but governmental authorities, same thing. The idea is that if you are a city, township, or county government entity, that is an exempt entity. All banks and credit unions are exempt. Deposit institution holding companies. These are the public companies that own banks. They're exempt. All money services businesses. Now, here's one where we might have some people on this call or might watch this recording and say, am I required? Money services businesses are exempt. Okay, you are not required to file this. And we'll talk about that here in a moment on why not. Brokers and security dealers, Exchange clearing houses, we're not gonna have anybody like that here. Other Exchange Act registered entities, we may have some of those folks in here if you're in investments. Number 10, investment companies or advisors. Venture capital fund advisors, not just insurance companies, but insurance companies and insurance producers. That means agents. So if you have an insurance agency and you're a small, insurance agency, because as long as you maintain your state licenses, you are not required. Now, for my friends in Tennessee who might be on this call, if you're in Tennessee, Tennessee is a little unique in this element because Tennessee does not require that the entity be licensed at the state level. Excuse me one second. In Tennessee, each agent is required to be licensed, but the agency itself is not required to be licensed. So if the agency is not licensed, then yes, you do have to comply with this law. If the agency is licensed with the state, and that's what the agent, what the agency, then no, you do not need to comply with this law or with the reporting requirements of the law. All right, number 14, we're not gonna have anybody here with that. 15, accounting firms. I mentioned before under accounting firms, if you are a Sarbanes-Oxley registered firm and you're in the practice of providing assurance services, then no, you do not have to comply or report. But if you're like me, who is only in tax advisory and non-assurance services, then yes, we do have to comply with the law. Public utilities, financial market utilities, pool and investment vehicles. Here's a big one here, guys, 19 tax exempt entities. So these are all entities that file their taxes on a 990, generally speaking, under the 501c series of entities, the most common being 501c3. But certainly if you're a C2, C3, C4, C5, up to C9, then in any business really under the C series, you are exempt from complying with this law. If you are an entity who your only purpose is assisting a tax exempt entity, then generally not. But make sure you follow the Q&A on this specifically, and make sure you work with an advisor who can help determine if you are exempt or not. Large operating companies, we're generally talking about businesses that have no owners, either 25 or more owners, or no owners that make up 25% or more of ownership. Subsidiaries of certain exempt entities are also exempt. And number 23, inactive entities. So if you had an entity like, Rick, I believe I created a business, several years ago, do I need to register it today? If you go out to the Secretary of State and it says inactive for any reason, and I'm going to put a caveat on that, and it is no longer operating. There are a lot of entities out there who are inactive on their state's websites because they haven't paid their annual fees, but are acting in fact. I would encourage you in those cases to report. Why? Because think about it, if you are acting and you are filing tax returns, one part of the government knows that you're in business, and that's gonna, and that, generally speaking, from a neighborly standpoint, IRS and FinCEN are side by side. So whatever you report to one, you might want to make sure you report to the other as well to keep those things consistent. Okay? But if you are inactive and truly inactive, then you do not need to report. All right, so let's look at some examples here. We have Sarah here who owns 30% of a local bakery that is a Michigan limited liability company. Now, in this case, yes, the entity needs to report her ownership details to comply with the CTA. That is true. Okay, if we meet Jennifer, who owns 100% of a restaurant that is a Tennessee corporation, then obviously in that case, it is an entity, it's as a corporation, so it should report its details with, to comply with the Corporate Transparency Act. Let's meet Dwayne. Dwayne is 100% owner of an insurance brokerage that is an Ohio corporation. As a result, the agency does not need to report their ownership because he is a registered insurance agency with the state of Ohio. Okay, key thing there, because they have another entity that's watching over them, they do not need to file with the CTA. Now you might say, Rick, does that apply to all businesses? For example, a hairdresser and I have a state license of cosmetology. The state oversees me as well. Unfortunately, no. In those types of occupational licenses, all that you've done in those licenses is show that you are up to speed with your continuing education and that you've done some kind of coursework so that you can perform that profession. But unlike these other entities, there's a lot more oversight that goes with, say, an insurance agent than that goes with, say, somebody who is a hairdresser or a barber. Two totally different things. So don't think that just because you have a state license on the wall that you're exempt. Not so. It's usually the ones that are not just licensed with the state, but have significant registration requirements like stockbrokers and insurance agents, generally financial people. Also on that thread, think MSBs, money services businesses. These are the places that generally you go to send like remittances, buy money orders, buy financial instruments that are not banks. That's an MSB. That's a money services business. All right, so we'll again cover our corporate compliance checklist here. We're going to identify our beneficial owners, collect their information, file with FinCEN, and monitor for changes. That is the compliance checklist. It is not that big of a challenge. I would say that most individuals, actually, I would say every individual has the ability to file this and file it accurately. It's not that difficult. The issue is, and why some people might want to bounce this off of an attorney or a CPA or something of that nature, is if they have specific questions regarding their exemption requirements, or if they like the idea of passing off that risk to somebody else. So that way, if you say, hey, I hired a firm to do this for me and I'm out of compliance, you can put the finger and say, hey, I'm engaged with this other firm to do it for me. So from yourself, it doesn't look like any kind of willful non-compliance with the law. Okay. Let's see here. All right. Got some questions here. We'll go ahead and answer before we continue here. How will the law be enforced? IRS via audits, etc. Is there info in enforcement law? No, the law is brand new. And right now, what has happened is the banking industry has had to do this for the last 5 years. They have literally been falling over themselves to comply with this because they do not want to misstep and be subject to these fines and penalties. Because all it takes is for the government to point out one situation and say, hey, this entity was willfully negligent, and make an example out of them. What's happening in a lot of cases is that, if you've opened a bank account in the last several years, you've experienced this. The banks are almost enforcing more rules on top of the baseline law. And the federal government's been very clear on this. That's not the intent. They don't want entities like attorneys, CPAs, banks falling all over themselves to comply. They just want the information. It's like, listen, we just want to know who the entities are and who owns them. That's all we want. Okay. That way, if we notice activity that's happening here, we know who to go to ask some questions if we believe that there are illegal activities happening. Trace, you asked a great question. Is this now an annual filing like taxes? No, it is not. Okay. We're only going to file updates when something changes. So we're going to have an initial reporting, and after we as long as nothing changes after that point, there's nothing else to report. Okay. So no, it is not an annual filing. Great question. All right. So as we kind of get to the end of our presentation here today, it requires the BOI, business ownership information reporting. That's what the act requires. Most businesses must comply. It is important to meet deadlines to avoid penalties or other issues. All right. I feel like that we've already asked these a bunch here, but I want to go on and discuss other things here. For more information here or to file, you can go to fincen.gov. This is the website you're going to go to. When you go to fincen.gov, you're going to find the links and everything to file for your BOI. And of course, you're welcome to contact us. I do have our Michigan information up there. For folks that are joining us from Nashville, you can find us online at frazier.law. We are licensed to practice law in Michigan, Tennessee, and Texas. So, and of course, when it comes to federal questions of federal law, that's open to all 50 states. All right. want to thank you guys for attending here. What I want to spend a few minutes here while we have a few minutes left here in the clock, is I want to discuss judicially what is happening with this law. Okay, so what has happened is a group, or I can't even call it a group. A plaintiff has come forward in the 11th Circuit of Northern Alabama, the 11th Circuit, the 11th Judicial District, and in the Court of Northern Alabama, a suit was filed here, and a judge has ruled that the Corporate Transparency Act is non-constitutional, okay, or unconstitutional. However, there's an issue, because the plaintiffs in that case came forward saying that they represented basically all the small businesses of America. And unfortunately, that's not a thing. You can't go to court and saying, I represent people who I don't really represent. So in effect, because you can't do that, the ruling by that judge, even though it could have nationwide impact, it doesn't, because the way that lawsuit was brought up, it only applies to the plaintiff in that case only. And ironically, the plaintiff in that case is an exempt entity because it is a nonprofit. So in essence, even though it was ruled unconstitutional by the 11th Circuit, it has no impact on the rest of the country or anybody else for that matter. So what is the federal government doing then? The federal government has escalated it to the 11th Circuit Court of Appeals in Atlanta, and it is now in their realm. So either what has to happen is somebody else needs to bring a separate suit for this law to be declared unconstitutional, or there has to be some other type of ruling. What will likely happen in this case is the question will ultimately work its way up, probably to the Supreme Court. And is it possible that one day the Supreme Court could say the Corporate Transparency Act is non-constitutional and the Department of Treasury has overstepped its boundaries empowered to it by Congress? Yes, that could happen, but that's not going to happen for a long, long time. The other thing that could happen here is that the Supreme Court could uphold the law and say, no, this is completely in the Department of Treasury's oversight of our financial system, oversight rules given to it by Congress, and is absolutely enforceable. Well, in that case, then that's why we're encouraging everyone to follow the law as it's currently written. All right, let's see here. I don't see any other questions here in queue. Courtney, I don't know if we want to open up or anything else, but if anyone has any questions, I can certainly stay on the line here for another 10 minutes and answer any questions you may have regarding the Corporate Transparency Act.
Yeah, great. Thank you, Rick. This was great information. If there's any other questions out there, please make sure you put those in the Q&A area so Rick can see those and get those answered for you.
Absolutely. Tracy, I'm absolutely happy to scan out my slides. Courtney, may I send these to you, please?
You sure can, and we're also recording for our resource hub. So yes, please send those over.
Very good. And for those of you that are watching the recording, again, if you have any questions, feel free. You're welcome to reach out to our offices either in Midland or in Nashville, and we are happy to serve you. All right. Well, perfect. I don't see any other questions in queue. So Courtney, on behalf of the CMURC, we're delighted that you joined today's session of Strategize Me. Courtney, do you have any closing announcements here before we get on with our day?
No, thank you, Rick, so much for always coming with us with some great information. I believe this was exactly what people needed to understand what the Corporate Transparency Act is and how to move forward and act fast. So thank you for this presentation. You always do such a wonderful job. So
well, it's truly my pleasure. Look forward to catching you all next time.
Of course. Thank you. And thank you to everyone who joined. We'll see you soon.
Bye-bye.